What's happening, guys? I wanted to switch up the scenery a little bit. Came up here to the lake this weekend, and apologies for any sounds behind me or boats going by or people working on their homes, but it comes with the territory. So, with that said, I always say I'm going to try to make it shorter. I'm going to try to compound it all together, and as you guys know, it always ends up being the same length anyway. So I'm not even going to start the scan off by saying that. But this is the game plan for April 12th and the week ahead. Go over some current market thoughts as well as other things that have been asked recently when I asked the question on Twitter and Instagram for some questions for today. So first and foremost, one of my members had asked me, what my thoughts were about the volume being so low, and it wasn't really anything that I had particularly paid attention to, but Zero Hedge put out an interesting tweet that basically Friday, each day leading into Friday was the lowest day of the year, volume-wise. So I think that the key or the most important things to kind of be aware of in a situation like that is that you don't want to be stepping in front of moves, and we are in a melt-up mode. SPY is right back at it, and when you're in a melt-up mode, you don't want to step in front of moves because when that kind of market environment is happening, things can go a lot longer than you think. They can last longer than you think. They can go further than you think. And if you're not fully prepared, then you're just gonna get taken out, and it's not fun. So I think you should expect the unexpected, and be aware that markets are a lot thinner than you think. And one of the things about the current market environment is there's just so many names, big names that are in the indexes or in ETFs. So it's really a options-driven market, and when that happens, you actually get to see just how thin the market is. So I do think we're going to have a huge week ahead. I think that there's going to be a lot of great opportunity, but that does not mean by trying to find the top, trying to get the best entries. In my eyes, it's let these things exhaust out. Maybe join some trends. I've been joining some trends in situations like we've seen with breakouts and things like that. But the most important part is not to step in front of it and not to think that it's broken out too far. And if you do that, I think that it's going to help you with getting run over on the front side of the move. This week, I think the most important probably aspect of the trades that worked was being able to recognize the trend early on and recognize what was sort of the theme this week. And it started with RMO. RMO was pretty much a SPAC that had faded, I don't know, 75, 80% off the highs, and it had yet to bounce. It finally had some heavy 100, 200 million share type of volume, and we ended up having that secondary move and then that next breakout, and it really provided a fantastic liquid opportunity, something that we haven't seen in a while. We've seen ridiculous liquidity on small caps. You've got circuit halts, you've got all these different traps that you have to be aware of, but we haven't seen that on stocks like RMO, and then we had XL, CLOV, and other names that are a lot thicker that don't typically have 50, 60, 80% intraday moves, and in this particular case they did. So it was really a breath of fresh air to see real names, thick names, high volume names giving these types of opportunities where you could actually size in and trade a lot more size than maybe you typically would, and not necessarily have to worry about all these circuit halts and traps that all these market participants are or have been doing recently. So I think half the battle of this current market is being able to recognize trends early and a recognition of trend. And so if you paid attention on RMO, you saw the same sort of stuff happen on XL, and then XL went into CLOV the very next day. And then on Friday we had FUBO. If you look at the actual charts, if you look at the overall daily chart, the trend coming straight down, unwinding, going to the lows, and then all of a sudden you've got this 50, 100, 200 million share day, you've got this really big opportunity where you've got the original move, it comes back, it consolidates, the volume starts to trend, starts to really build on itself, and then you've got that secondary shove. And whether or not it goes into a third and a fourth, that's something that we just kind of have to watch the volume, watch the trend, and see if it happens. But fortunately for us, we had trades both ways. And like I said, for me, it's a breath of fresh air because it allows me to be a little bit more confident sizing into these moves versus something that maybe has got a 2 or 3 or 5 million float where it might be trading 100 or 200 million shares, but you're one swipe away from a disaster. So you kind of have to watch your size no matter what. Whereas these, yeah, you still need to trade within means and trade, make sure your risk management is in check. But it allows you to trade things in a more aggressive manner or a more normal manner rather than just kind of always having to have that plan B and make sure that you've built in enough room that, if they do come and they do swipe it and they do want to take you out, that, you're okay. But, as you guys know, those circuit halts are tough. And, it's something that I try to stay very, very far away from. Because look, it only takes one to go into a couple circuit halts. You don't know which one it's going to be. And when they come by surprise, unfortunately, a lot of times you have the most size, right? So whenever something works perfect, you never have enough. And whenever something is not working, you always have too much. It's just the way that it works. So to kind of to condense that, the point of that last piece and the point of that point is being able to recognize what's working, right? So we had low floats, we had maybe some full day type fades a week ago, and then this past week we had these bottom bounces that started to compound over on top of each other and provided these secondary moves intraday, as well as the fade back in the following days. All of them did the same thing. And so, we might have a great opportunity on FUBO. It's one of my main watches for the week ahead, but same kind of concept, same kind of thoughts. So keep that in mind. And then one topic that I wanted to talk about is, and I tweeted it on Friday, but why did you lose, right? And a lot of times I think people just kind of chalk it up as a loss. I lost, that sucks, I'm mad, I'm upset, whatever. For me, I never get upset losing because I was supposed to lose, because I stopped out, because I traded my plan, right? That's part of trading, and if that upsets you or makes you emotional, you shouldn't be trading, right? It's all about what we do with those losses at that time when we're faced with that kind of risk management, check-in. Do you really have risk management, or are you just just getting by? And a lot of times we find out on some of these crazy situations whether or not our risk management is actually real, or if it's just something that we think we have. So I think that the most important thing is understanding the why in which you lost. And I was talking to a friend of mine this past week, and sometimes when he would lose before, he'd get really frustrated, and he'd beat himself up, and it's really all about how you reset and that next mentality that we've talked about. But why did you lose? And you should be more upset with the fact that you either veered off course and you were just trading something totally random, or you didn't check in with your risk management, you didn't respect your stops, right? You shouldn't be upset at the actual loss. And when you get upset with the actual trade itself and you beat yourself up, you're losing your confidence, your conviction, all those kind of things. So you need to be able to pinpoint the why, right? And every single one of your trades should fit into one of those categories like we talk about. Is it a late day fade? Is it ABCD type setup, red to green? Is it a parabolic setup? Whatever the case may be, you should be able to identify it right away. If you're in a trade and you're like, yeah, I don't know why I'm in it, then where is the edge? So you should always be able to put it into one of those files, one of those compartments, whatever it may be. And if you can't, you shouldn't be in the trade. So the point here is that when you are taking those trades and when you're not actually able to file it away and you lose, you should be really upset about that. Not because you lost any other time, but you should be upset because you decided to veer away from the process. And the process is what gets you, to the next level, the next level, the next level. And when you veer away from that, that's when you run into trouble. Let's see what else we got. It's a little bit harder looking down here compared to my computer real close. Um, One of the other things too is, after losses, we start to second guess ourselves, and we're already looking to get out before we're even in the trade, right? You see a lot of these traders, they're in and then they're out, in and out, in and out, in and out. And as soon as they are in that name, they're already looking for their exit. Rather than focusing on letting the trade work, rather than having some bigger picture game plan, they literally make a trade and they're ready to get out. And that is not something that you can compound, that you can exponentially grow. That's something that is just always going to be limited and to at some capacity non-exponential growth. And once again, just a reminder that we've talked about before, right? You always, when you can pinpoint the why you've lost, you can go back and remind yourself how far you've come, right? You can remind yourself that this strategy does work, your process does work. But if you can't pinpoint the why you lost, then you're not going to have the confidence, you're not going to have the conviction for the trades. So you should always be able to go back and understand the why. It's going to help you. And I put a tweet here because I was talking to a friend of mine who did phenomenal on Friday and phenomenal last week. And he actually got smoked the week before. And I was not necessarily worried for him, but I was like, he did it again. Hopefully, he's got some good trades or whatever. But he said, you know what, I'm just upset because there was no reason for me to be taking that trade. I didn't respect the risk management. He got mad at the fact that he broke his rules. And that, at least, that way, he still has the confidence that his process works. Most people that are trading don't have a process. So let's get right into the questions that were sent in, and then I'll jump right into scan, and that'll be it. And we'll see how this one times out compared to the others. First question was, how much wiggle room at key levels do you leave on a starter until you move on? So that really depends on your conviction on the trade, what you're thinking, and really what your size is. So there are times that I might dabble in just one entry. There are times that I might kind of put on a little bit more, but I'm still staying within a threshold. And there was a cruise trade this past week, CCL and NCLH. And I just put on a small amount, but I was super high conviction. I knew in my mind that this thing was going to fail by the end of the day. I knew that I did not want to size on the front side of the move. However, I left my starter on. I didn't really have a stop. But as soon as it had that exhaustion move, as soon as the trend started to fade, as soon as it started to have failed follow-through momentum, I started to size in. And the one thing that I said in the room was, now that I have size on, I'm going to respect an actual stop. That's the difference between, kind of dabbling in, and then once you size in, you need to kind of transition to an actual stop. Otherwise, once you size in, that's when the big losses come, if you don't respect trend. For a lot of people, I suggest to avoid the starter completely, because what I've noticed is sometimes people put it on, they call it a starter, but it's not. And it's actually a half of their position or their whole position, and they don't really understand the concept. So that's always where you can kind of come in and draw lines and get familiar with, the difference between the front side of a move and the back side of a move. And if you can do that, then you're going to be a lot better at, scaling into that move and actually participating when you're on the right side of the trade, rather than, having max exposure when you're, wrong the most. So wiggle room is all dependent on thought process. For example, if you go back to look at my CCL trade and the NCLH trade, if you go back and you look at the daily resistance and you look at the pre-market broadcast, I talked about it on the broadcast, and I was basically risking over and under that daily chart resistance. And I figured that I'd want to go back and test through it. And just because it's got a heavy resistance spot does not mean that it can't break it. And it did. But like I said, I felt like it was going to end up coming right back under and then unwind. And that's exactly what happened. Had it come back and held that resistance spot, so if it went through it, came back under, and then held, that would have been my cue to say, okay, I'm not going to size in anymore. I'm going to move on. I'm going to wait for it to break down under key levels. So that would be a situation where my wiggle room, or I would adjust and probably just get right out. How do you identify which positions to scale in and which not to? So I want to be scaling in when I'm right. And the win to loss ratio, it doesn't matter how many times I'm right or wrong. What matters is, what do you do with your losers and what do you do with your winners, right? And a lot of people are adding and adding and adding into their losers. My goal is to add and add and add into my winners as long as the trend is confirming my thoughts. Most people just jump in and they add, ruin their average. And then it comes back the other way, and they end up either covering for flat or overstaying and turning into a loser. The key to adding into a winner is to pretend that you're not in the trade yet. Is it a good entry? Yes or no? If it's a yes, then I scale into the trade. If it's a no and I'm just maybe adding because I already have a padding, then I skip it. I wait until that's a yes. And that is a good kind of way to think about scaling into positions, because it's very easy to get into that second and third and fourth add once you're already there, because you're kind of adding, you're looking at your realized P&L. But once you have size, that room for error and the quickness at which that P&L can flip becomes more and more aggressive. So you have to be aware of that. How do we trade in this current market with the range not being as wide? Seems like every move just has one leg. As someone who doesn't like trading the open, I'm finding it hard to find opportunity. So you want to stay away from this channel, right? So typically every morning on the broadcast at 8:50 a.m., all the main watches, I go and I put the channels in. And I say, you want to be aware of getting chopped. You don't want to get too aggressive into this top end. You don't want to get too aggressive into this bottom end. And rice is a perfect example of, on Friday, if you chase the breakout, squashed right back down, right? So my goal was to accumulate towards the bottom end of this channel. And that level that I wrote was 1380s to 1440s. If you chase that first move to 15s, you are probably emotionally selling into the 1440s, 1420s, right? So the key is always to draw out those levels. You're not going to get those outlier moves in between, right? So you don't want to get too aggressive. Otherwise, you're just going to be playing ping pong between the resistance and the support. So when I try to scale into a trade, when I try to get more aggressive and let that trade work, I want to be on the either above the channel or below the channel, because that's when you start to get those outlier moves. Volume exhaustion. This one's always a popular question. What do you mean by volume exhaustion? So if you think about when you're on the wrong side of a trade and you are, it's starting to get squeezed up, you've probably added a few times and you're just dead wrong, right? At what point do you say, I give up? I'm exhausted, right? And so I try to go on the other side of that trade. And I try to think about, okay, if I was upside down here, where would I be emotionally attached to it? Where would I just say, all right, I'm out, a market cover, I'll come back later, I'll do whatever. And so I try to go on the other side of that trade and identify those levels and then wait. Because you never know if it's just going to be one squeeze out, consolidation, trap, and go higher, or if that was the exhaustion move and then fail. I want to see it exhaust out, pull back, retest, and I want to see a stuff right there. And then at which point I know, just like we talk about a lot, the dip buyers become pop sellers. And then I start to have more competition on the side that I want to have it on. Next question was, when is it time to move on from a successful trade for stay for more of a big picture? And I really think this comes down to what your game plan is, right? So sometimes people take other trades because they see somebody else trading them. Sometimes people take other trades because they think they should be long. Think about Viacom, for example, right? How can it not bounce? Well, it doesn't have to, as you saw. So I think that a good way to kind of think about that is always to go back to what was your plan. And you kind of make a plan ahead of time. As long as it holds this level, I want to stick with the trade. And if you don't, then that's when you end up in a little bit of hot water at times. So always be cautious, overholding. Always have some sort of game plan. For me, I look at daily chart resistance. If it's a bigger picture type trade, I look at daily chart support and daily chart resistance. And if it's starting to stay heavy under what I felt was support before, then I usually go ahead and either size down or get out. So, don't be afraid to adjust around the core trade. We talked a lot about core in the last video, but if you get too aggressive, the trade's working, you've been kind of adding into the trade, and then it stops. You can always scale down that size and move on and wait to the next point where you can add in. The last question that was sent in was what to look for when trying to spot midday or pre-market runners. So for me, it's always volume. And you don't really see me trade a lot of low float type names. If I do, it's quietly. I don't really post anything that has low volume just because it's just not my style. I want to trade stuff that has hundreds of millions of shares traded. I want at least 10, 20 million, but ideal trades for me is 50, 100, 200 million shares. I like to be able to get in, get out with really no fear of liquidity, and that to me is important. I don't like trading really low float type names where you're one swipe away or one newsletter alert away from being on the wrong side in a hurry. So it's always volume for me, and I watch how fast it compounds, right? And a couple people had asked me, is there a way, I mentioned it's tracking for X volume. There are ways. You can probably Google a lot of that, and then All Day Faders on Twitter puts out a lot of information on that. But you can find out what things are tracking for, and if it's tracking for a much more volume than a prior day, then there's a good chance that could change where it's going to go today versus another day. And if the prior volume day was maybe 50 million and you're already at 50 million pre-market, then yeah, your antenna should be up on the short side, and there might be potential there on the long side. So for me, it's always about liquidity and volume. Volume trumps all, and that is my key focus for any time that I'm looking for either a pre-market trade or something that could start to build into the after-hour session or something like that. So next section will be for the Sunday scan portion. Hope you guys enjoyed that. If you guys have any questions, as always, leave a comment. The most important part for this video is if you can leave a like, and if you put the timestamp with your biggest key takeaway. As you've seen, we've been doing a lot of videos. We've been pulling stuff out, which maybe you miss, right? A lot of people watch this first 20 minutes back a lot of times because they pick up on something that they didn't see the first time. But if you guys just put the timestamp, what we've been doing is putting those videos, whether it's a 10-second clip, 20-second, 50-second, whatever it is, we've been kind of making that micro content so you guys can see what other people took as key takeaways. So I've been getting a lot of positive feedback, and I do appreciate you guys helping me out with that. All right, guys, so this is the second part of the Sunday scan. This is where I go over what I'm looking to trade for the week ahead. Once again, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. It is getting a little chilly here, so I might start to fly through some of these charts. However, FUBO. FUBO was a fantastic trade on Friday. It was just like what we saw on RMO, XL, as well as CLOV. The key was to let everybody else get on the backside or the front side of the move, get squeezed out, and then once that exhaustion parabolic move came in, at that point I was going to be interested in the trade. So you can see the trade that I made here on Friday, and it ended up being a very nice opportunity, high probability, good risk, good return type of trade. You can also see that if you were patient and you just waited for the backside of the move, you can see how clear cut it was just by drawing a couple lines and kind of seeing that you had this failed fall through momentum after it exhausted out. And you can see where it started to peak out here again, and it started to break under that 24 level. Now, I'm on my laptop. I don't remember if it has my cursor. Hopefully it does, but if not, the levels that I was talking about was the 2470 level where it started to exhaust out, as well as the 2410 levels. So tomorrow, the key levels that when I go into the room and do the 8:50 a.m. broadcast, the key levels that I would draw is what was the last channel that it was stuck in. And the last channel that it was stuck in was between 2350s and the 23, maybe 2290 levels. So I don't want to get too aggressive towards the top end or the low end because, as you guys know, you can get chopped up. So in an ideal world, we gap up, we get a nice retest of Friday's VWAP, and then I'd be looking to fade it back down. With that said, if we gap up and it starts to base at 2350s and it starts to hold throughout mid-morning, I don't want to get in a fight with it. There's going to be a lot of shorts there. There was a lot of volume. It's been a chart that's gone continuously down, but that doesn't mean that it can't bounce for a couple days. So it's going to be a big trade. There's going to be a big opportunity, but this is nothing for me to get too aggressive right off the open. That's when you start to get in the, on the wrong side and make mistakes. Rice has been another one that has been phenomenal for the room, and the goal on Friday was to get long on weakness for a potential move towards 17 or 18. I felt like on Thursday they did a lot of rotation of volume, a lot of trapping, and they were just kind of setting that trap so they could squeeze everybody out into the weekend. And they did exactly that, and it continued to go after hours up to the 19s. In an ideal world, we open 20, we run to 22, heck, maybe even 24. That's me hoping. I don't have a position at the moment anymore. But, if I'm thinking from a short perspective and a potential opportunity, I'd love to see it not only gap up, but also squeeze out again. So I do think that there are shorts trapped here. I do think that there's going to be a big opportunity. But for me, I really want to see it blow off and then participate. I don't want to try to find the top. If it starts to go 21, 22, there's no stopping it if there's enough shorts, right? So it could go 23, 24, 25. But if I start, dabbling in 21, adding 22, and then I get blown out, that doesn't do me any good. The best I can do is probably make it back on the way down. So I want to be hands off, let that happen, let them come in, and then I will be looking to potentially trade the fade. And that could be as simple as drawing a line under the level that it continues to hold. If you did that on Thursday, you saw where they were trapping everybody. And that's why I said 1380s to 1440s on Friday was going to be my goal to basically accumulate dips versus that 1380s level. And if you draw that line across 1380s to Thursday, you'll see the exact reason why. TQQQ. This has been a daily watch for me. It's been an okay trader pretty much every single day. There are days that I get in there and I just kind of lose a little bit, and then there's days that I scale into the trade and it works out really, really well. So it's one of those daily kind of drivers, I guess you could say, that I start into it and I scale in if I am right, and if I'm not, I just kind of let it do its thing and take the loss if it ends up not giving me something to scale into. Then we've got AFMD. So AFMD was a great trade, great opportunity from pre-market on Friday. Had all failed fall through momentum, but it felt super, super trappy in the sense that I felt like there was a lot of shorts in it, but it was still a super, super heavy name. It was still, very long crowded in my opinion, or at least there was a big seller in there. So it was controlled. Each time that it looked like it was about to rip, they sold right into it. It did hold relatively well into the close. So I do think that shorts are still present, and I do think that 1020 becomes the key level. And, quite simply, once again, just drawing that level, 1020 being the prior top there, and you can see, we're pretty much at, 990 and pretty much 970s or so as sort of a consolidation base. So I want to be cautious getting too aggressive in between that channel. But if 1020 were to form as a base, then there's a good chance that this could squeeze out. If it opens at 1020 and has trouble with it, I like a small dabble for the fail. And if 970 starts to confirm for failed follow through momentum, then at that point I would probably start to scale. Those are going to be my main watches. For failed follow through setups, STPK. This one's been a phenomenal squeezer off the low. Once again, another SPAC chart that had completely unwound. Maybe not 70-80% like some of the others, but it had pulled back quite well. It shot up on Thursday, came in a little bit, and then squeezed back up towards those highs. I think you can easily see that 3150s is a key level, and that could be done by just drawing a line right over here, 3150s, and you can see that it's kind of sneaking back up to that level. So we might have trouble with that level. So that's the area that I want to see kind of blow through, come back, consolidate, hold as a top, and then fade off from there. I want people to, either get squeezed out through it. I want dip buyers to keep on buying and then become pop sellers. And once we see 3150, 3140, 3130, that's the key. That's what I'm looking for to potentially fade it back down. But for now, you want to assume that it might want to break out and hold over that 3150 level. Viacom, you guys know where my head's at on that one. We had that one bounce day. Everybody was like, yes, finally, it's here. Nope, it's not. And I still am of the mindset that we're going 38 to 40s. I still think that it's super, super crowded on the long side. I think that, much like, Perma Bears thinking SPY can't go up, I think Viacom is filled with Perma Bulls. I think that this was a huge situation that happened. I think that, just like GSX, you can see that. I think a large portion of the float was held by these funds, and now it's out there. That's going to take time to digest. It's not just going to happen overnight. It's not just going to double 50% bounce. It's not going to do any of those things unless there's some type of news catalyst. And I think there is earnings coming up too. Don't quote me on that. You can verify it, but just something to think about. One swing that I started, SRNGU. I started this one. My risk will probably be about 10 over and under as sort of a guide. There was some information out on Friday, and if it ends up becoming true and working and coming to fruition, then it should be a really nice trade. So nothing I want to chase, nothing I want to go too aggressive with, but I would start to use daily chart VWAP as my guide to risk and hopefully let that thing work. The last couple that I was watching, CLOV, nailed this one on Thursday. And so I sold about 1/3 after hours Thursday. It continued to go about another 40, 50 cents after hours. Maybe I got bulled up thinking that maybe we'd get a 950, 10 open. We didn't. It was weak. So I sold a little bit more, and then I still have a small position just because, or about a half a position still, because I had such a good average. However, a good average doesn't mean anything if you overhold it. So going back to the question, if somebody had asked me about how do you determine a big picture idea or not, basically the 820, 850s need to consolidate and hold the next couple days, and if they don't, I'm done with the trade. So there's a huge momentum trade. I was thinking maybe they'll come out with a PR Monday, Tuesday, something like that, kind of reaffirming everything, and if they don't, then I'm gonna be gone. And then the last one that I was watching, VECT, was an IPO, was an ID1, and they let it go. I traded it from 22, and it went all the way up to 38. I didn't sell it. I was trying to let it work, but I ended up minimizing it. That's fine. However, I want to keep it on watch just in case they decide to go with it again. The reason why is because it was such a steady walk down. That gives shorts confidence, and these thin ones like this, as you've seen on a few last week, they kind of fade off, looks like nothing, and all of a sudden they come back the next couple days and squeeze everybody out. So I would definitely keep an eye on it. I would assume that it does not do anything, but if it does, then I think that it's a worthy watch. So that's about it. You can see that Scan's not overloaded with ideas. I've got my main watches. Last week was a phenomenal week. There was a lot of good opportunity. XL, RMO, FUBO, TQQQ. I mean, there was a lot. And, it was finally, we had the ability to size in, more aggressive and with more conviction rather than some of these lower float stocks that, you're one swipe away like I've been talking about. So that's just my style. As you start to grow your account, you need to look at bigger picture ideas where, you can actually size in and size out. It's one thing to nail a trade, and yeah, there's plenty of stuff that you can trade, but you can only trade so much, right? And that's fine for a couple thousand shares here and there. But as you progressively scale and get bigger and bigger and bigger and trade, you need to look for bigger, better opportunities where you don't have to have that extra risk of that one swipe. So That's why I always stay away from the low float garbage for the most part. And if I do, I trade it quietly and smaller. But that's about it, guys. So once again, leave a thumbs up, leave a comment. Key takeaway. If you post your key takeaway with the timestamp, people can go back, click it, review it. And my video guy Damien will go back and review it as well and turn it into a smaller video so that hopefully it will help somebody else. Once again, apologize if there was background noise. If this thing's a little shaky, it's getting windy here. We are on a point, so there's wind from all ways. So that's it. Have a good rest of the weekend. We'll catch you in the room tomorrow, and hopefully you enjoy the rest of your weekend.